Hello everyone, my name is Marcello Kolax and you are watching the European Energy Outlook for the week starting 22nd of April 2024. I can't believe that the year is just marching on. It's incredible how time is passing. The last Clever Markets Technical Analysis Academy from March is now just done. Everyone has graduated and the feedback has been amazing. So I just want to let everyone know here that the next Clever Markets Academy will launch on the 13th of May. And it is a 5-week technical analysis academy specifically designed for European energy traders. And you do get your weekly one-on-ones and your exercises and your quizzes and your ad hoc analyst access and your slides and your handouts. So I want to make sure that everything you learn is actually applied to your day-to-day trading. And don't worry, everyone participating is a busy trader themselves, and we can usually make it fit around your working schedule because, everyone joining the course is also heavily involved in the day-to-day trading. So we can make it work for you. So reach out, send me a DM on WhatsApp or on LinkedIn, or send an email to hello@clevermarkets.com, or simply go to clevermarkets.com and have a look around. There is so many ways to contact me. Just reach out and we'll figure out if the academy is the right thing to do for you. All right, let's start with the TTF front month. That was not a fun week for energy traders. Okay, we'll start with the weekly chart. And here, by the way, I want to take my sweet time to explain why I think the markets are moving and where we could go from here. So I'm not just throwing targets at you. Okay, so let's zoom out. On the weekly chart, we are seeing that we have been overall in a long-term downtrend, and we found support on the TTF at 22.32, that area that was hit last year as well, last summer. All right, and now we are moving higher, and I did draw in the FIB retracements from this from this peak up here down all the way down here. So now we are retracing higher again, and the 23.6% is for me always the level where I say, okay, now it's not just noise, we actually have a trend going. And the funny thing is, yes, I do identify noise for what is this, like an €8 move, but because we are on the weekly chart, okay, so we are thinking in bigger swings. But you can see, like over the past 2 weeks, we did close above this, which would usually, with also, by the way, high volume candles, and we can see the trend and momentum tools are pointing higher. So overall, I'm thinking, yeah, okay, probably there is room for the price to go higher, possibly to 35, which is a 38.2% FIB retracement. The more extensive corrections can go like 50%, 61.8, but let's take it like one step at a time. All right, I do not believe that we can make it up here in one go, and that is simply because of what the daily chart is giving us. We can also see that the stochastic is topping out. So usually like a toppy stochastic together with almost bullish trend momentum tools means that probably we could move a little bit lower before we continue higher. But this is best traded on the daily chart because we are not trading on the weekly chart anyway. So entering positions, that's what I mean. So here we can see that the near-term uptrend is bullish within the ascending channel. So that is undisputed, right? There's no question about it. So the price has been going up since February, essentially, in these swings. Now, last week was brutal because we did accelerate above the channel. Then we did get a bearish Harami pattern, which would usually ring in some decline, but only if we close above it. So essentially, if you followed the Clever Markets dashboard, then which is available for clients, then we would have said, you know what, this is a bearish setup and it's looking pretty bearish, but you kind of want to see confirmation. There was no confirmation, but we have it now. So you can see bearish Harami, then almost a hanging man, and now we turned this into a bearish engulfing. So we have like one bearish candle pattern after another. And these swings are brutal, right? From 33 to 30, like €3. Crazy stuff here happening just from one session to another. So I did draw in these FIB retracements here again, and remember, we are below the 23.6% FIB, so it's more than just noise. We have an actual correction lower going on. So the deep corrections can go all the way to the 61.8, and I think that's most likely simply because we can move 3 euros in one day, and we did get bearish stochastic signals here as well, so I say maybe we start the week a little bit weaker as well. And this here, the 61.8% FIB near the 28.5 is a good first, like reasonable, deeper correction level. So now here's the combination between bearish stochastic and bullish trend and momentum tools. So what gives, right? So these are like, they are showing us bullishness, but we are bearish. What's going on? Very simply speaking, we are correcting lower, as seen with the stochastic, possibly towards the 61.8% FIB. But overall, the market is expected to still continue higher thereafter. So bearish stochastic with bullish trend momentum tools shows me that correction lower before we continue higher. With the evidence available to us now, so this can change. Yeah, we would be wrong with this bounce idea if we make it below the 61.8% FIB and then push towards the channel. Here I would still say, yeah, extensive correction, okay. But as soon as we start closing below the channel, then it gets dangerous. And then I would say the near-term uptrend is unwound. The bulls have exited the market effectively. So I think a little bit lower before we continue higher, right? Can you see this is kind of reflected on the weekly chart as well? We're seeing hesitation here, maybe a little bit lower before we continue higher. Now, what does that mean for Monday morning? So I'm zooming out here and we can see that on the 15-minute chart, same also on the hourly chart, of course, we see that this is a good support level. Once, twice, 3 times has been hit already. So this is a confirmed trend line. And we did add in these Fibonacci extensions. So right now, I expect that this down leg here is replicated here. And we are nearly there already. So what I would assume, maybe for the start of Monday, that we maybe even move a little bit higher. Yeah, that is possible. But even if not, I think that we could on Monday morning or by Monday midday, we could start hitting the support near 29.3. Depending on at what angle we hit it, yeah. But I think the first hurdle is 30.22, then we could make it to 29.31, and then the market has to make a decision. With all this evidence, like bearish trend and momentum tools available, and we are making lower lows and lower highs in both like the big swings and the small swings, I would say that a break lower seems most likely. And here the first hurdle is 28. So can you see where 28 leaves us on the intraday, on the daily chart? We could make it almost towards the 61.8% FIB. And this is called multi-time frame analysis, where all of these levels are essentially put together with different targets overlaying, right? So now we know that different traders with different trading strategies, all acting on different time frames, all kind of gunning for 28. So I feel that this is a reasonable target. But we always want to see confirmation, so I say the last bit of confirmation is below the trend line, and we also want to know when we are wrong. So on the intraday chart, we are wrong if we no longer make lower lows and lower highs. Right now, the most recent peak is at 31.45, but of course we will have subsequent lower peaks. So I would always shift this bearish invalidation level lower as we make new lower peaks. And all of this is very doable, and it can be taught within 5 weeks, specifically within the Clever Markets Academy starting on the 13th of May, where I will share. I mean, the whole academy is essentially built around the in-house methodology. And if you enjoy the content that I'm putting out here for free on LinkedIn, and of course, if you are already a client for the Clever Markets dashboard, then do reach out to me and we can see if this academy is the right step for you, so you can do all of this on your own. All right, that was all for the TTF front month. And of course, the EUAs are looking fairly similar to what has happened on the TTF and NBP, but the difference is in the details. So here on the weekly chart, we can see that we have now approached our old trend line resistance. That goes back all the way to summer 2023, and we are now hitting it again in the 73 area. So looking at stochastic, I would assume that we could correct lower somewhat before picking up again. I think that overall this is just a minor correction lower before we push higher, simply because stochastic gives us the small moves at good resistance here. So a little bit of a move lower, whereas the trend and momentum tools give us the big pushes. We could assume we can draw in this tentative trend line here, so we could head the market near the 63 area, but I'm not 100% convinced by this. I don't want to get confused by this trend line, so for now I'm leaving it out, but it is definitely possible to draw this in. Then on the daily chart, we kind of want to know, okay, so how far can we correct lower, right? So that's why we are working with the fib retracements here. We are trying to retrace this entire up leg and see how low we can go. And last week we did have this bearish Harami and then a bearish engulfing and confirming stochastic as well. So the market is definitely ready to move lower. We already also broke below the 23.6% fib that was now removed from the chart. So I genuinely believe that 68.02 could be easily taken, and then we could make it to the 61.8% fib at 63.78. Maybe depending on the angle, depending on where we hit it, we would then also find support at the channel border. So here's the thing, the near-term uptrend is in place, but I'm not telling anyone to hold on to anything as the market is dropping from 75 to 60 almost, right? Like a 15 euro drop. No, of course not. But from a broad perspective, yes, we are still in an uptrend. So the current down leg that is playing out on the daily chart might be best played on the intraday chart. So here we have the 15-minute. We already broke below the ascending trend line. So you remember from the TTF and NBP, we are still a little bit above it, but on the EUAs, we have broken below it. So now the next level of support is this confluence here near 68.06 and then the 100% extension at 6655. So here I'm simply assuming that this down leg will be replicated here. I think it is definitely possible to take those, considering how bearish trend and momentum tools are, and then we could make it all the way to the 62.38, which not as clean as on the on the TTF and NBP, but the 161.8% at 62.38, 62 somewhat aligns with the 50%, 61.8. So that's on the daily chart. So that's why I think we might find some support there. All right, that is all for the EUAs.